You want to be rich, right? You dream of a life filled with luxury, comfort, and freedom. Of course you do. Everyone wants financial freedom. It's a universal desire to live without the constant worry of money. But it doesn't happen by accident. It takes knowledge and action. You need to educate yourself and take deliberate steps towards your financial goals. One of the most important things you need to understand is the concept of assets. Assets are the building blocks of wealth. They're your ticket to a secure financial future. They are the foundation upon which you can build your financial empire. Think of assets as the bricks that construct your financial house. Each asset you acquire adds to the strength and stability of your financial position. Imagine a life where your money works as hard as you do, where every dollar you invest grows and multiplies, creating more wealth for you. That's the power of assets. They can work tirelessly, day and night, to grow your wealth. By understanding how different assets work, you can make your money grow and achieve your financial goals. Whether it's stocks, real estate, or other investments, each asset has its own potential to contribute to your wealth. Whether it's buying your dream home, retiring early, or traveling the world, it all starts with understanding assets. These goals become achievable when you know how to leverage your assets effectively. This isn't about getting rich quick. It's about building sustainable wealth over time, avoiding risky schemes and focusing on solid, reliable investments. This is about making smart choices today for a brighter tomorrow, planting the seeds now so you can reap the benefits in the future. So, let's dive in and unlock the world of assets together. Let's explore how you can start building your wealth, one asset at a time. Let's keep it simple. When we talk about assets, we're talking about things that hold value and can contribute to your financial well-being. An asset is something you own that has value. It could be anything from physical items to financial instruments. Think of it like this. An asset puts money in your pocket. It's not just about having something valuable. It's about how that value can work for you. It's not about spending money. It's about making your money work for you. This means investing in things that will grow in value over time. Your house? That's an asset. It can appreciate in value and provide you with equity. A rental property? Another asset. It generates rental income and can also appreciate in value. Stocks, bonds, even that little bit of cash stashed away, those are all assets. They can grow over time and provide financial security. Understanding the different types of assets is crucial. Each type has its own characteristics and benefits. Why? Because each asset has its own personality. Some are more volatile, while others are more stable. Some are risky, but offer high rewards. These are typically investments like stocks or high-yield bonds. Others are slow and steady, providing stability and income. These might include bonds or dividend-paying stocks. By understanding these differences, you can build a portfolio that aligns with your goals and risk tolerance. Diversification is key to managing risk and achieving financial success. Stocks are like small pieces of big companies. They represent a fraction of ownership in a corporation, giving you a stake in its future. When you buy a stock, you're buying a tiny slice of ownership in that company. This means you become a shareholder, with potential to benefit from the company's growth and success. Think Apple, Google, or Amazon. These are some of the biggest and most well-known companies in the world, and owning their stock means you own a part of these giants. Here's the exciting part. When the company does well, its stock price goes up and your investment grows. This can lead to significant financial gains over time. That's how people make serious money in the stock market. By investing wisely and holding onto their stocks, they can see their wealth increase substantially. But hold on. Stocks are also considered a riskier asset. The stock market is known for its volatility, meaning prices can change rapidly and unpredictably. Why? Because their prices can fluctuate a lot. This can be due to various factors like economic conditions, company performance, and market sentiment. The market can go up and it can go down, sometimes dramatically. Market crashes can lead to significant losses, and it's important to be prepared for these fluctuations. So, are stocks right for you? It's a personal decision that depends on your financial goals, risk tolerance, and investment horizon. If you're young and have time to ride out the market's ups and downs, stocks can be a great way to grow your wealth over the long term. With patience and a well-thought-out strategy, you can potentially achieve significant financial growth. Bonds are different from stocks. They're more like loans. When you buy a bond, you're essentially lending money to a government or a company. In return, they promise to pay you back the principal amount plus interest. Think of bonds as the reliable, steady friend in the investment world. They generally offer lower returns than stocks but are considered less risky. Bonds are a good option if you're looking for a stable income stream or if you're closer to retirement and don't want to expose your portfolio to too much risk. Real estate is a tangible asset that most people understand. It's about owning property, your home, a rental property, or even land. Real estate offers several advantages. First, it can provide rental income. Second, its value tends to appreciate over time. And let's not forget the emotional satisfaction of owning a piece of land or a beautiful home. However, real estate also has its downsides. It can be illiquid, meaning it's not always easy to sell quickly. It also requires maintenance and can be affected by economic downturns. Despite the risks, real estate remains a popular and potentially lucrative asset class for building long-term wealth. Section 6. Cash is king. Sometimes. The role of cash equivalents. Cash is the most liquid asset. It's the money in your bank account, your emergency fund, and your short-term savings. Cash equivalents are investments that can be easily converted to cash, like money market accounts and short-term government bonds. While cash might seem boring compared to high-flying stocks, it plays a crucial role in your portfolio. It provides a safety net for emergencies and allows you to take advantage of opportunities when they arise. However, holding too much cash can be detrimental in the long run. Why? Because inflation erodes its purchasing power over time. Section 7. Finding your perfect asset mix. Goals, risk, and you. There's no one-size-fits-all answer when it comes to choosing the right assets. The best approach depends on your individual financial goals, risk tolerance, and time horizon. Are you a young professional just starting out? You might consider a more aggressive portfolio with a higher allocation to stocks. Are you nearing retirement and looking for stability? Bonds and cash equivalents might make up a larger portion of your portfolio. Understanding your risk tolerance is crucial. Are you comfortable with market fluctuations, or do you prefer investments that offer more stability? Your risk tolerance will greatly influence your asset allocation decisions. Section 8. Don't put all your eggs in one basket. The power of diversification. You've probably heard the saying, don't put all your eggs in one basket. This couldn't be truer when it comes to investing. Diversification means spreading your investments across different asset classes. Why is this so important? Because it helps to reduce risk. If one asset class performs poorly, the others can cushion the blow. It's like having a financial safety net. By diversifying your portfolio, you're not betting on any single investment. You're spreading your risk and increasing your chances of achieving your long-term financial goals. Section 9. Keep learning and growing your wealth. Congratulations! You've just taken a crash course in the world of assets. You've learned about stocks, bonds, real estate, and cash equivalents. You understand the importance of risk tolerance, diversification, and aligning your investments with your financial goals. But this is just the beginning. The world of investing is vast and constantly evolving. Don't be afraid to ask questions, seek professional advice, and continue learning. Remember, the best time to start investing was yesterday. The second best time is today. So take what you've learned, start small, and watch your wealth grow over time.